Hey everyone, welcome to a new video here at Sublime Traders. I'm Logical Orange, and today we are going to take a fresh new look at the market with a fresh new week that is starting today, with BTC sitting at 41.9k with a market dominance of 41%, ETH at $3,150. Some altcoins are trying to break out right now. However, we are at a critical support zone right now, so let's check the charts. So you might say that my daily chart is a bit messy, but I'm trying to keep it as clean as possible with as few indicators as possible. But I assure you that everything you see on this chart is necessary for the analysis that I'm going to make right now. So you can see clearly that the bright orange trend line is the supporting trend line right now, and we have also a support area right here that is also the 40k area, psychological level support area, extremely important. I want to draw your attention to the parabolic SAR for 1 second. Parabolic SAR is one of the simplest indicators out there, and it really just indicates the trend. So parabolic SAR stands for stop and reverse, and you can see that it plots dots above or below the candles for an uptrend, above the candles for a downtrend. Right now we don't have any dot below the candles, meaning that we are still not rushing to the upside, not even rushing, not even turning to the upside. We are now in extreme indecision, and look at the last candles on the daily. We have double wicks. While this would mean reverse also in a trend, it might stop and go up. What is concerning is that we are hanging on the trend line too closely, and we might break on the downside also. And if we break on the downside, we will go for the 40k level once more, and if we don't hold that level, we will head for the next pivot, which is at 37.4k, and then we will head for the major level that will be at 30k. So this level right here, the 30k level, I think is the ultimate target for the bears. I really hope it doesn't fulfill, because it would mean that a lot of longers would be liquidated. Of course, we will adapt, we will short. If we see that we break on the downside of this trend line, we will really need to take a lot of shorts into consideration. For now, let's focus on what is going on right now. So the trend line, no parabolics are right now. The sectors also, this is really important. This is why I have all the lines all over the place right here. Sectors are raised that are started way back, with candles that we started way back, and create trend lines basically. And we are now in this small sector right here with a low at 41.4 and a high at 44k. Now this is Bitcoin, the trend lines, the sectors, the parabolics are the EMA. We are of course under the EMA, but we are missing one information that is important in basic analysis, and this is the Fibonacci retracement. And I'm going to trace a Fibonacci retracement starting on the lower low that we had previously when we interacted with the current trend line and the previous high. And we can see that we have the 0.618 just above us. So guys, this is so important. The resistance and support the 0.618 can provide is immense, and we really need to break above this level. So this level sits at 44.5k. As long as we are sitting under this Fibonacci level, we are at the risk of going lower. We have an extreme need to overcome this obstacle. We can see that this obstacle makes sense all over the chart. It has been a support resistance area before, so we really need to go over this level. If for some reason we will sideways all the way up into this what seems to be a triangle right here, it is too early to say it is a triangle, but it can be, because we can wick up, down, and we can eventually form a triangle that will breakout somewhere around here. If we do this, we will have a double resistance with the trend line, with this trend line right here. But enough with BTC. Let's take a look at Ethereum and see how it looks. There is a reason why I like Ethereum. So you can see on this chart it has a very similar pattern to Bitcoin, which is not that amazing. However, we can have a much clearer view on this chart that we are really pointing upwards. You see all the lines are trending upwards. Of course, I can plot some downwards pointing lines. I can point some other rays if I want, and I can really sectorize this more if I want to. However, what I have is really enough for Ethereum, because I have one important thing that is supporting me right now. Besides the levels that are sitting right here, that are in bright yellow, that we can see, one at 3K, also psychological level, and of course one that is of course more important at 1.7K. Well, a long way from here to here, almost 50%. I really don't think that Ethereum will get this low. Why? Because, well, people will try to get into Ethereum as much as possible before Ethereum 2.0, where we have a lot of promises. And believe me, guys, the team that is managing Ethereum is delivering on their promises sooner or later. The implementation of an EEP takes a lot of time, and that is why we don't see improvements in gas prices right now. But I assure you that all the problems will be fixed, and when they will, Ethereum will absolutely explode in terms of price, and in my opinion it will overperform Bitcoin. One important factor that is to be noted on the chart of Ethereum, on the daily chart of Ethereum, is the Fibonacci retracement. That is why I traced the Fibonacci retracement on Bitcoin before finishing its analysis, because I wanted to compare it to that of Ethereum's. And we have a main difference right here, is that the 0.618 is below the price, so it's acting as a support compared to that of Bitcoin's, which is acting as a resistance. This is one of the main factors that leads me to believe that Ethereum will overperform Bitcoin. This can also mean that you can trade Ethereum versus Bitcoin, and you will probably still be in profit if you take a long trade right now. And before I end this video, I want to propose an experiment. And you might see on my chart that I have a vertical line around here, which sits at the 28th of June 2022, and you might ask why it is there. So I will explain. The distance from the current price to the vertical line is equal to the distance from the current price to the last price interaction with an ascending trend line. And what I'm going to do here, I'm going to show you a Fibonacci retracement that makes a lot of sense, and I'm going to try to project it in the future. So I'm going to use for this the wedge Fibonacci tool. The wedge Fibonacci tool, which is an arcing Fibonacci tool, and I'm going to trace it 172 days to the back, and I'm going to verticalize it like this. And I'm going to check the interactions of the price with the Fibonacci retracements. Of course, as I always told you, the 0.618 is the most important Fibonacci level, and it reacts the most. The 0.5 directs the trend more or less, and then we have the 0.3 and the 0.2 with various resistances and supports. Now I want to show you the same thing but in the future, because as you can see, it makes sense, and I based my Fibonacci retracement on the biggest support trend line that I have right here, because of course it makes sense. So in the same manner, I will drag and drop to the 28th of June. I will place it like here. Let's align it a bit so we can have an idea of the future. So we can see that we might have an interaction with the 0.236 around this level. It is a confluential level with another trend line, another sector. Then we have the 0.382, that we saw in the future doesn't really make much resistance or support. It doesn't really make anything. Then we have the 0.618. So 0.618, if we were to take it in an ascending pattern, so in ascending trend line right here, well, it would be a lot of resistance. So wherever the price would be in this range, it will meet resistance on the 0.618 and then the 0.7 also. However, this will be an extremely important level. So of course it can be 61k, it can be at this point it can be 57k, 58 even, or if we were to just zigzag around this channel right here, it would be an important resistance area at 51.7k. So this was just an experiment, guys. You can try it yourselves. You can try it on multiple charts, multiple time frames, and multiple coins. It will make sense. This is all for today, guys. Thank you for watching. This was Logical Orange for Sublime Traders, and see you on the next one.